So this is often a question that we get from new prospective clients that decide to join Precedence and work with us on the investment side, is that they ask, I've transferred my assets over from institution X and I notice that we're still sitting in cash, or there's a large portion that is still possibly sitting in cash. And the reason why this occurs is when we're structuring a portfolio, what we're doing is we're taking into consideration what risk the entire portfolio will have, not just the individual investments within it. So for an example, if we just say we get $500,000 transferred to us on June 10th, and we can't purchase certain alternative assets or non-correlated assets until later in the month, we don't necessarily want to just push a bunch of assets into the market without having the corresponding or non-correlated assets on the other side to protect it. And so what we will do is within that month, we will patiently wait until we can strike all the different investments that would necessarily affect all of that portfolio as a whole. For an example, we wouldn't necessarily buy energy, equity, and ETFs and everything market related without being able to add U.S. Treasuries, private debt, private equity, private securities that are not correlated to the market, on the off chance that if the market were to fall swiftly, we wouldn't be able to protect that portfolio. So this is something that comes up from time to time. Your advisor should be structuring your portfolios this way. If they aren't, they are going to leave you susceptible to these swift market movements that, yes, on a probability standpoint, don't occur. But imagine if this occurred and you transferred money on March 10th of 2020 and you didn't get those non-correlated assets into your account until the end of March, you would have seen 30–40% losses on your equity investments, and that's just not acceptable. So be patient, allow the portfolio to be structured properly, and you're going to have all the protection and the success you need.